had a longer executive session than we thought we would need. Thank you for your patience. Thank you for coming out in this weather, and we will be with you right away. We have one other matter, a motion to approve the resolution regarding audit committee policy on audit firm rotations. Could somebody make a motion?
I'd like to move that this resolution.
Is there a
be
second?
adopted.
I second it.
Any objections? I assume all the members are in favor?
Yes.
Okay, that's it. And now we will go into your stuff.
She'll introduce.
Yes, my name is.
You want to
Spencer Hobson.
introduce yourselves?
Sure, we'll do that. My name is Spencer Hobson. I am Director of Finance for NYC, EDC, and affiliated entities. With me today, we have Paul Houseman, Deputy Controller, Yuan Chalik, our Controller, Bruce Rollins, Director of Internal Audit, and also with us Kim Hansen and Amy Wong from the audit firm Ernst & Young.
You with Ernst & Young? You two ladies.
Yes,
Give my best to Mr. Nelson.
I will.
I prefer to give it to Mr. Ernst.
What? Randy Nelson is the father of
I thought that would wake you up.
Rather than the Land Development Corporation, it really wasn't much. So I would recommend, if you want to come back to it, maybe we should move to EDC and then to IDA. I think so. I mean, that's the meat of the stuff.
Shall we start with EDC?
Yeah, would you please?
Somebody perhaps can explain to me why some enterprise of this size should exist separately, because the audit fee was almost $20,000, and given the size of this thing, isn't it better to run this into something else?
Which entity are we?
The Land Development Corporation.
Yeah. There is arrangement that this organization was founded based on arrangement of the Attorney General. It was a supplement.
Right, it's set up so that EDC can, the Land Development Corporation can obtain property from the city at a not arm's transaction, and then dispose of it to developers. EDC was not eligible to do that once it changed its.
The economics of having something this small, as distinguished from having it as an entity within the city, doesn't make sense to me.
The organization was just found, so it's 2 years old. The organization was just found 2 years ago.
Yeah, no, it's just been around a short time, but it seems so small. Okay.
I know we were gonna not spend much time on this, so just quickly, do you know if there's any effort on behalf of the city's Albany Intergovernmental Relations Group to change your charter so that you could do some of this rather than have all these spin-offs, or you're not aware of that?
I think that that's a legal matter. We went from being a 501c3 to a corporation that is basically tax exempt according to IRS 115, Code 115. And so I think that that was one of the things that precluded us from getting land at less than fair value. So that's why we had to, from a legal standpoint, set up this separate entity. And yeah, as you stated, it's something
But it's not
of a burden
statewide,
to
it's
have to.
federal tax law.
Right.
Thank you.
Okay. You have a statement on EDC, sir?
Yes.
Please,
And it's
speak
quite-
up,
quite
speak into
big
the mic, thank you.
So, I'm going to present the audit financial statements for NYCDC. My presentation will be structured in 4 categories. First, a brief general organization, introduction to the organization. Then the second, overall financial status and the performance. My third point will be then the financial statement activities, financial activities, I'm sorry. And then I'm going to conclude my presentation for EDC with the schedule of investments.
Okay.
So overall, the corporation completed a successful financial year. Compared to the previous year, NYCDC increased its revenues by 4% and reduced its operating expenses by $3 million. The corporation continued to push forward with great efforts on the remediation and reconstruction work that Superstorm Sandy caused during fall of 2012. This year's financial statement continues the track record that it was set last year by having no notable material weakness or significant deficiencies noted by our auditors. The second point is the overall financial status. On page 12, you see the statement of net position. The corporation reported total assets in excess of $1 billion. About 2/3 of this balance consists of restricted cash and investments, as well as receivables from the city, in total about $600 million. The total liabilities amounted to $693 million, of which the majority of this balance accounts for unearned revenues and accounts payables. The overall financial net position of the corporation totaled to $351 million, an increase of $27 million from the previous years. In regards to the overall financial performance, on page 13, you find the statement of revenues, expenses, and changes in net assets. The corporation reported operating revenues of $888 million. About $595 million are grants related to capital projects, and $190 million relates to property rentals.
Who provides the grants, the city?
It's city, state, and federal,
City,
but
state.
great
Okay,
majority
Thank you
city.
for the clarification.
The operating expenses totaled $857 million, mainly consisting of program and project costs. That's about $613 million, and net operating income totaled $31 million. This income was partially offset by non-operating expenses relating to Superstorm Sandy. So the net realized gain, or in other words, the changes in net position, was $27 million.
I noticed that on the operating expenses, the program costs declined, I don't know, about $43 million when you compare 13 to 14. Any reason for that?
Yeah, we had less project activities on the capital side. There was
Could
one
you,
of
could
the-
you speak up?
We had less capital projects, so when you
The
have,
program costs, okay.
yeah. So the third item I have is the highlights of the financial activities. On page 4 of the audited financial statement, there are 11 highlights listed, which reflect best the performance of the financial position of the organization. So I would like to go over these items and make brief comments so you understand.
And what page are you referring to?
It's page 4 on,
Of the statement?
yeah, of the.
On the MD&A?
Yes.
Okay.
On page 4 of the NDA,
It's the MD&A.
can't be right.
No, I'm sorry. Page 6 does. I
Page 4.
stand
Oh,
corrected.
this, okay.
It's the highlights, go ahead.
Yeah. So the first 5 highlights relates to the statement of revenue, expense, and changes in net assets positions. First, the revenue portion, reimbursable grants, it decreased by $16 million, which is a result of the before-mentioned lesser capital activities. The property rentals totaled to $189 million, an increase of $18 million. Is a result of the refinancing transactions at the 42nd Development Project, the 42nd Street Development Project, and the Brooklyn Renaissance Plaza. Additional pass-through pilot revenues, particularly from the 42nd Street DP, to the city contributed to the increase as well. The third item on these highlights is the real estate sales. The net increase was $30 million, and the balance reported was $61 million. Among others, sales were closed for Flushing Commons, BAM South, and the 110th Street gas station.
So so EDC had the title to these properties,
Yes,
and then they sold them.
yes.
They developed them before they,
We develop and then we sell them, or we just pass them through and then sell. So on the expense side, the fourth item on these highlights is the program and project cost. decreased by $9 million and totaled to $613 million. And this is also, again, primarily lesser project activities and capital projects. Property rental and related operating expenses totaled to $53 million, and it increased by $7 million due to increased activities in property rentals. The next 6 highlights relates to the statement of net position. The cash and investments totaled to $465 million, a decrease of $32 million. The decrease is a result of disbursements to the Highline Park, about $12 million, the water siphon project, another $12 million, and mortgage proceeds, payments to the city for Columbus Circle in amount of $9 million. The next point is due from the city. This totaled to $302 million, an increase of $17 million, which is a result of the community development block grant projects relating to the aftermath of Sandy. And the last point of these balance sheet items is the loan and mortgage receivables. This totaled to $36 million, an increase by $7 million, which is a result of the mortgage notes received from Crescent 110 Equities and for the sale of properties on the 110th Street gas station.
Where in Manhattan is the 110th Street?
110 and 9, I think, is it?
Yes, on the west side.
Yeah.
It's on the west side.
It's in,
110th on the west side? It's not west of Broadway then, can't be.
I'm not even sure exactly where the.
I drive, my daughter's on 110th and Riverside, I know that block very well.
Right, there was an old gas station that was there at some point.
Must be further east,
Yeah, all right.
whatever it is.
We can supply them.
Don't bother, I drive by it twice a week, so I
Okay.
never saw a gas station.
And then the last 3 items relates to the liabilities. So the real estate obligations totaled to $24 million, a decrease of $7 million. And this is due to payments made to the city relating to the Columbus Circle transaction. Tenant securities and other deposit payables totaled to $20 million. This is a decrease of $7 million. And unearned revenues totaled to $236 million, a decrease by $26 million. This relates to payments made to the Highline Park project and water siphon project.
Is there still a lot of activity with the 42nd Street redevelopment, the Times Square redevelopment, or it's slowly ending?
Well, we control the ground leases there, so.
All right?
We control the ground leases, so the state turned over.
Oh, so you're gonna be around more?
Right, exactly.
Okay.
Right.
Now, that clarified it.
And my last point on the EDC presentation is the schedule of investment. There was a separate report issued from Ernst & Young along for that. And as to the actual numbers, on page 3 of the schedule of investments, on June 30, 2014, total investment totaled to $163 million, of which $112 million were considered as unrestricted and $51 million were considered as restricted investments. The total investment income totaled to $1.5 million. Unrealized losses of $342,000 reduced the investment income to $1.1 million. And this is the amount shown in the financial statements. The total investment portfolio on page 6 consists of federally secured assets, commercial papers, money market and mutual funds, as well as CDs. The federal portion of all investments totaled to $86 million. Money market investments were $87 million. So this concludes my presentation. I'm happy to answer any questions.
No, that's fine.
Page 6.
Actually, maybe I'll ask the auditors. The schedule of investments is actually taken from page 30 of the regular. Is there any
Correct.
particular reason for that?
The main reason that we produce the schedule, separate schedule of investments, is intended to respond to the Public Authorities Accountability Act.
Okay,
Which
all right.
asks for more guidance.
You've
on
answered it, okay.
So
So
we-
rather than refer them to page 30, give them a separate schedule.
Right, and then we also then have a lower level of materiality when we're looking at a
Got it,
standalone
okay.
schedule on investments.
Apropos of that, the first line of this item says money market and mutual funds. Those are very different things. Money market funds are instant money and no market risk effectively. Mutual funds are not money market funds that I know of. They refer to differently. Why are they on the same line?
You have some money market mutual funds.
Well, we have money market mutual funds as well.
Okay, I'm just accustomed to seeing money market
Markets.
funds and mutual funds of a
Right.
different category, but that's the way it works, that's okay. And then in the next line, you say money market deposit accounts.
Right, so there's a separate, there's investments that are money market mutual funds, those are pretty considered
I know what a-
investments. And then we have demand accounts with, let's say, with Tracy.
But those are demand accounts at a bank.
Right.
So why do you call them money market deposit accounts?
Because that's the nature of the.
That's what it is?
Yes.
Title.
Okay.
On page 48, the
Yeah.
combining statement of revenues, expenses, and changes in net position. So,
38, page 38.
48.
48,
48.
the special schedule,
Hey,
it's under the supplementary information. You would have it, miss?
Yes.
So, it's very, very, very detailed, it's very good, but you're picking up some stuff from Apple there, aren't you?
Right, so what we did to respond to the question that came up also last year, to show the
I remember.
breakout
Go
between
ahead.
Apple and EDC, within the footnotes of the financial statements, we have a footnote that's condensed combining information that breaks out the activity between EDC and Apple. On the back schedule, there's, of certain of these categories, there's going to be a
Okay.
certain extent of overlap between the two entities here, which now going forward, Apple is actually part of EDC,
right.
effective October 1st. So we won't have that separate type of
No,
breakout.
it's very nice because you can go back to the, I guess it's the income statement, you can see the 351 I'm sorry, the 359, the 351, and the 351 is in the balance sheet as well. All right. Is there any possibility that Apple will ever merge into EDC, you prefer, or its preferred management prefers it this way?
No, Apple has been merged into EDC as Ken
Has
just
it?
stated.
Yeah,
It
I
has.
remember reading it.
It has
So in
effective
other words,
October.
next year, we won't see a separate set of statements for Apple.
There's gonna be a small stub period of about 2 months, 3 months, that through October, September 30th, we'll see.
It's a timing issue then.
Yes.
Right.
Exactly.
I have some bits, but go to page 18, please.
Could I just ask him
Oh,
just
I'm
one
sorry,
thing?
go
No,
ahead.
so what is, the Brooklyn Army Terminal, it has commercial properties in it,
Correct, 420 approximately,
420 in it.
yes.
The big picture of it in the paper the other day.
I missed it, I'm
Yeah,
sorry.
there's a lot of vacant
A-
space. it
a-
shows.
a- And
Not really.
the maritime, that's your markets,
Yes. and
and you talk about aviation, what is that, the heliport?
The heliport, and it includes also the,
I don't know, if it's another small airport, maybe, I don't,
Heliports. Yeah, just basically the heliport, the 2 heliports.
it's the heliports, I think, yeah.
yeah,
It's just the heliports. I can remember years back when it was a Department of Markets, then it became a Department of Ports and Terminals, but all right. So I think that's a step forward that they're gonna be moving in. And Apple was involved with the 42nd Street project as well,
that's correct, yeah.
but I guess at the end of the day, it'll all be merged in you. It'll all be one part, one discussion under the 42nd Street.
That's correct.
It was a major improvement, a major improvement. Go ahead, Mark.
If you would turn to page 18, there's a couple of things I couldn't quite make sense out of. In the first paragraph of the footnote, it says that in the area, the city and from the three properties, what area? Are there three properties from those three properties, or what's the area referred to? I couldn't find the antecedent.
City net revenue from three of the properties is retained.
So this, the other properties portfolio is the Audubon campus, the
I'm suggesting you
parking
need to
garage.
clarify it here.
Clarify
It
that,
doesn't
exactly
make
where
any-
it is, yeah, no,
And
absolutely.
then, I'll give you the rest, because there's some little bits and pieces here not worth taking everybody's time about that page. But I always lose on this thing, but why everybody feels compelled to talk about the impact of recent pronouncements. Now, you now have in recent pronouncements something that's March 2012. That's a little old, isn't it?
It was adopted during, technically, it was effective during this fiscal year, even though it was announced originally by
Okay.
Gatsby
Okay.
back in 2012.
Then, when you refer to the Gatsby 70, you say it doesn't have a significant impact. The prior one you said has no impact. What is this difference in terms of,
So, let's see, with the previous one,
some places you say significant, some places you say and.
usually we'll make some distinction. If it won't have any impact, we'll go no impact. For something like 68, where we put it's not going to have a significant impact, that's the pension standard. It's not going to have the big impact that's being felt for a lot of organizations.
I'm trying to understand the
but
difference between the two.
It's usually a
disclosures.
level of degree.
Will there be changes to the disclosures as a result of
Yes.
68?
That's basically, so just to clarify, for that one, there's a little bit, but overall, not a huge
Okay.
impact.
But because got the same problem all the way through here.
Yeah, we'll look at the
I'll give you the
consistency. and clean
marks.
that up.
Like, there's some other little bits and bits.
Bernie and Nicole has a hand up.
It's the corporation's policy to record disposed assets.
Yeah.
These are retired. I did not understand the footnote 2 on page 23. It is the corporation's policy to record disposed assets as these are retired from use. Either they're disposed or not. I mean, I didn't understand what you were getting at here. You can look at it later. Don't hold everybody up.
So, our disposal policy, or generally our fixed asset policy, is we're gonna maintain a property still in our books with a reminder position of $1. And once this property is retired or, recycled or just thrown out from the assets, that's where we record 0. That's where we take them off from our fixed assets ledger.
All right. If I may, on the city waterfronts, do you own or run on the west side the new piers where the large ships come in who do the cruises? You don't own those, do you, or
No, we don't own the terminals, we're just managing.
you do manage them?
We manage only,
Right.
yeah.
So if Celebrity, I'm just picking a name, comes in, they will pay who for the use of that?
They will pay EDC for document.
For the use of that,
Yes,
I see.
absolutely.
So that requires you maintaining it, doing capital improvements as needed.
Absolutely, so we take care of not only that pier, but also the terminal in Brooklyn.
I'm sorry,
Also the terminal in Brooklyn.
there was a new one, yeah.
If
I
you-
remember when we've had the Brooklyn Navy Yard people, and the water takes the structures take a tremendous beating from the water, so I'm sure you have a lot of capital expenditures related to it.
Yes, including dredging, periodic dredging of the water so the bigger ships can get in, yeah, so it does require a lot of maintenance, a lot of
One of
work.
the effects of environmental beneficiation, because the creatures are there to eat the pilings better now.
That was an issue for
Yeah.
quite long.
If
yeah.
you
Who
don't,
actually owns the terminals?
City.
The city owns it. Well, the city owns the one on the west side. I believe Port Authority owns the one in Brooklyn.
They own some of them, I know, I've seen their signs. And when you take the markets, that's that Hunts Point Market in the Bronx? Is that where the Fulton Fish Market moved to?
Correct.
Yes.
So they're your tenants now?
Yes,
There-
that's correct.
yes.
All right.
Are you also involved with the Fresh Direct site there?
Yes.
The idea, yeah.
There are a lot of stuff, these guys.
A little controversial.
We'll take
And
this
I
as a
guess,
compliment.
I guess the retainage payable, that liability, that's for your contractors who did capital work and you took a retainage. Do you invest the retainage money or do you just keep it in cash?
No, we keep it in cash.
You keep it in a restricted account?
Yes.
You have to, it's a pretty large sum.
Well, that's to the extent that we pull it in. And
Sorry?
That's to the extent we actually pull it in. And I say that because we're basically reimbursement basis with the city. So only when we pay is when we actually pull the money in-house from the city.
No, I guess I'm making myself clear.
Right, the retainage liability you're talking, really, we don't, there's no money for that until there's an actual payment.
Yes,
So that's an accrued liability that we record.
it's a non-cash, but it is not a cash liability?
Not at that point, no.
All right. What? Yes, but, yeah, yes, Nicole, I'm sorry.
No problem. On page 29.
29?
29. In cash and investments, a remaining balance of about $125 million is uncollateralized and also not insured. That seems like a very large amount of money to be uncollateralized and not insured. Do you have a board?
So, this is a quirk of us, EDC being a quasi-governmental entity. We have since had legal counsel advise us that in the event of a failure of Chase, that the monies that they were collateralizing, saving, putting aside for us, may not actually be available to us. And so we've had to take a different tact as far as securing the money, and that's why we are invested in money market funds. And this is something that is really just evolved. It just evolved this fiscal year, and we will be continuing
You
with it.
advised that even though you had your deposits collateralized, that wouldn't stand up in the event of the insolvency of the bank?
That's correct.
Because there are a lot of other organizations we review which collateralize
Yeah.
their deposits.
But again, because of our status as a quasi-governmental entity, it's believed that should push come to shove, that money would not be available. We would be unsecured.
Wow.
Even though the bank was confirming us that it's all collateralized, our legal counsel had a different opinion, and we took the conservative approach, just by saying, okay, in case of a failure of the bank, we want to be just conservative enough to secure those assets, so our strategy will be changing now going forward, what we do with this money.
How about spreading the risk to 2 or 3 different banks?
That's one of the strategies that we kind of diversify the banks. But this is kind of like also a domino effect, so if one fails, probably others can fail. But we have also, different tactics in terms of where we're gonna invest or where we're gonna keep this money. So we will have those secured in federal assets, so that we're safe.
Okay, then I had one other substantive question. When you get to page 26, you have breakdown of the income, and you have a category of miscellaneous, which is big as almost the whole rest put together. Is there anything significant, any one segment of that miscellaneous that's significant, or is it a lot of little things?
I think that's a lot of little things just adding up there. I mean, we can supply the
No,
breakdown
as
too.
long as it
Yeah.
just, it looks odd to have
Right.
that big a miscellaneous item.
And we can take another look at it for next year to
Yeah.
break it out further if we need to.
And I'll give you the rest.
I vaguely recall a few years back, the page that Mr. Kaplan referred to, you started to buy parcels in Coney Island. There's been an economic development. I remember we had Simcha Felder was the deputy controller then, and he was somewhat familiar because he ultimately ended up and went to the state senate representing, if not Coney Island, the other areas of Brooklyn. What is the development that's going on there now? I mean,
Well,
they're building housing, or
no,
this will be commercial development?
commercial development, correct. And if you look on EDC's balance sheet, there is a $105 million asset for
Yeah.
the land.
Oh, for the
that's-
land.
Absolutely. And it escapes me exactly when, but we will return the land, the title to the land to the city at some point.
It was mostly vacant land, or there was,
Well, it was cobbled together for the new construction out there in the, yeah.
all right,
Can't get hot dogs in session.
Bernie,
That stays.
I'm sorry.
My great-uncle owned a piece of that concession.
The Nathans?
Not Nathan, I'm sorry, it was the
Unbelievable.
frozen custard thing he had.
Excellent.
Bernie?
Yes,
Okay. One additional question on page 32. In the cash and investments section, under concentration of credit risk, in light of what you just told us, I'm a little bit more concerned now with the fact that you have no limit to your concentration of credit risk.
Well, so there's no limit to the specific issuer. However, and you, as the table demonstrates, we are going to federally secured investments. So to the extent, it may not be from limited to a particular issuer, but they are federal.
Is that a policy?
That is our investment policy.
You may want to mention
Yeah.
that.
That's better than none at all.
Yeah, others say the same thing.
and page 33, I guess that's a very interesting schedule. I think well put together. You're gonna be in business for a long time, I guess.
We're hoping.
Well, I hope so too, honestly. And, the tenants pay you, and then you'll pay the city when they call for funds or whatnot.
Correct.
By the way, that point you just made, if you look at page 31, second paragraph, credit risk is covered. Limited investments, the debt, in highest rating in the U.S. government guaranteed,
Excellent, thank you.
pretty much there,
Yeah.
a lot of pluses.
I shouldn't have asked the question about 42nd Street. You're gonna be around a long time. That was a beautiful job, right, Mark? You're there, you're
We're right there. We probably consume enough electricity to light up all of North Korea. I don't know if you folks have seen the new sign that's on the Marquis Hotel. You see it, your office is close by. It runs a whole city block and around the corners. It's the biggest sign in North America.
We haven't seen it yet, but certainly we're gonna walk by.
It's done very, Google rented it, and it's not very imaginatively done, but it's monumental in size.
Very interesting.
You should go and look.
Yeah, it's close enough to us.
How many-
You can look out the window looking north.
On page 34, you talk about your pension plan without getting into all the details. Approximately how many employees do you have, full-time employees?
Approximately 400 and, it's roughly
450.
450 roughly,
I see. And they're not employees of the city, they're employees of EDC.
of EDC, correct.
Uh-huh. Therefore, you have your own pension plan
Yeah,
for
it's
them.
yes.
And you provide them with the health insurance benefits and so forth.
It's there.
Apple has no employees.
Apple had about 17 or 19 people. 19,
so-
yeah.
And now that,
Now they're EDC staff,
Yeah.
yes.
and the IDA has none?
No, no staff.
You run that too?
EDC staff runs that,
Okay.
yes.
When you guys gonna merge Apple in, Are you gonna keep the name someplace on the shelf?
We're gonna, well, internally, we talk about asset management
I'm just telling you,
portfolio.
that's, anything with Apple in it is a valuable thing to have, and as long as you have it now, you may wanna keep it alive for a few bucks.
We'll convey that to our general.
I'm sure there's someplace out west that might buy it from you. I'll give you some.
Yeah, no, they're fine.
I have a question on the management list.
Go ahead, go ahead.
Are we ready to move on to the management list? Thank you. I think that this is impressively short. It wasn't clear to me if a couple of these comments had actually been taken into account in these financial statements. One of them was specifically identified as having been adjusted, and that was the first of the two bullets in the tenant matters. The second bullet in that one and the first comment, it wasn't clear to me if they in fact were corrected in these financial statements.
Yes, so all of them have been corrected in the financial statements, and I think the first bullet, I don't have the management letter handy in front of me, but I think the first bullet had to deal with actually an item that management actually had found first and had previously adjusted before we were looking at those financials. We were just more commenting on the time frame and the improvement of communication.
I see.
It's not a item.
Note 17 of the EDC financial statements, that disclosure.
Okay.
This is the management letter?
Yeah, they were hardly anything, and
They were more housekeeping.
they
It
were,
may have been that I just read this quickly and missed it, but I would as a
and there was
suggestion
agreement from
be
management too.
what's been adopted and what
So.
hasn't been.
Absolutely.
And there was agreement from management on it, no issue.
How could you not capitalize the V in city? I got lost here.
What do people want to go to next, Apple or,
We can, Apple is included in,
and yeah, I don't,
but maybe IDA is, yeah.
maybe we
IDA
should
is the
do
next biggest.
IDA. That is the big one. I have some questions on that. I'm fascinated with IDA. You issue all this debt, and it's not outstanding on your books,
Because it's,
Except for two.
except for the stadium.
Yes.
Yeah. It's creative.
it's a conduit debt, so it's,
I never knew what it was. I called Mr. Spitzer when we were gonna go through this in December. We had to cancel the meeting. I called Mr. Spitzer. I says, what's going on? You people have issued a lot of debt on behalf of, organizations and whatnot, nonprofits. I know, besides. It's gotta be in the 7 billion, 8 billion, 9 billion.
it's,
Yes,
we
have
listed.
the
It's
disclosure.
bigger than a bread box.
Yeah.
Go ahead. It's amazing.
I think, but from an accounting standpoint, it had always been our policy not to include the conduit debt on our balance sheet, particularly because the IDA was not legally on the hook for, let's say, the payment, but
We did include the conduit debt related to the stadium.
to the
More for
stadiums
transparency
as offset by the
purposes.
pilot lease revenue to pay.
Oh, you have some other clients who treat that way?
For conduit debt, yes.
Conduit debt. So,
There are separate conduit debt disclosures.
I mean, what would be the flow of funds if, for want of, they issue a bond, let's say it's 100 million. And if it's conduit, what happens? It's still the same,
It's still really the same, it's just ultimately, if something were to happen, IDA is not going to be held at fault and legally liable for it.
It's,
IDA has no liability to the.
IDA has
To the
no
holders of the
liability.
Correct.
Only on the stadiums.
And even on the stadiums.
It's limited.
It's limited, and really the stadiums are almost essentially conduit debt the same way, but because of just to provide extra transparency, and because IDA was more of the owner of the stadium themselves at that point in time, the decision was made back in 2006.
Yeah,
To put them on, to
and
put
I
that on
believe
the
the
books.
key piece in that is that if the stadiums, let's say if, the stadiums may revert to the IDA at the end of whatever the lease term is, the 30-year.
Yeah, And who services what services the conduit debt? It may be pilot payments, other,
So it's mostly the pilot.
you speak up, I
It's
mean,
pilot payments.
Pilot.
Yes.
pilot for the most part. It's interesting.
Now, if
I
you-
know someone that's affiliated in a management capacity with the New York Law School, and you issued a couple of $100 million to help them build their new building.
That may have been through build? Through
Yeah,
build.
yeah.
Yes.
Yeah, I'm sure. And you issued for the tennis stadium. I remember you once had a schedule, it was very involved. The issue was, this was the balance remaining, so on and so forth. It was an interesting schedule, so as I say, you're huge. You're a big issuer of debt.
We do actually still maintain that schedule.
sorry?
Actually,
Yeah, we do.
We do still have that schedule. It's part of a different version, well, the exact version.
Well, it's maybe
is-
for your management, you may need it for your internal board of directors meetings.
We do,
And
and
also for all
also
the name
PAAA.
For P
Sorry,
It's
Okay.
published for the PAAA purposes as well.
Okay. It's an interesting schedule. Of course, you're issuing debt for many nonprofits, which is a worthwhile thing too. All right.
When you get over to cash, we
Go
just
ahead.
heard that collateral isn't collateralizing cash on the bank. It's
For
a di-
EDC, not for IDA.
It works,
It's not
it
the
works
same.
for you here.
Right, IDA
Yeah.
is a collateralizable entity, so to speak.
I don't know how they do it.
Well, it's the vagaries of the law, Bertie. I guess the two biggest financings are the two stadium, right?
Yes.
Yes.
And, and where does the revenue that services that debt should be on somebody's financial statements?
Well, the pilot revenue is here
Here.
on the statements. Now, what's not here on the statements
No,
is
but if
the
I'm
actual hard
trying to
asset.
understand how the city made out on those two events, where do I go to understand how the debt service is shaping up compared to the debt, and that's the projections at the time it was put together to evaluate the
We have that
project?
information.
Yeah, I believe that's,
The city-
Page 23, I thought was helpful, Mark. I don't know what, I thought it was interesting.
Let me go back and see.
My understanding is that the city really, at least in concept, doesn't have a stake in this. Like, because it's conduit debt and it's supported by pilot, even if there was a revenue shortfall, in theory, the city would not, EDC, or the city through EDC would not have any obligation with regard to making whole for that debt service. So,
Okay, not my worry then.
that's correct. That's what
I
Does
have
that
a
help a little
general
bit, Mark?
question.
I think,
I'm okay.
yeah,
Go ahead.
I'm sorry. I noticed that on page 23, where you have a detailed schedule for the 2 years, excuse me, on the stadium, amount due within 1 year, you're showing in bonds payable on the balance sheet. The 24.9 million, I know I referred back. So are there any principal payments? Where are they?
They're embedded in the P.
There's,
No, this is wrong.
oh, the discussion is terrific. Where is it? And then in 27, I'm sorry to make the people turn the page. The total debt service from 2015 on is really going to be about $3.8 billion. It's gajingo dollars, that's big money. That is big money, really. I guess stadiums have a long, useful life, I don't know. I guess they do, no, I don't know.
depends.
No, look at
What's
the one in
teams
New
may
Jersey
beg
that's just
to
been,
differ.
gonna be knocked down.
Yeah, unfortunately, historically.
All right.
I hate to have my name on that stadium, I've got, can't
Well,
remember.
and I think that that's what I was mentioning here at the beginning for IDA. at the end of the lease term, title does revert back to us. So it is conceivable that the IDA could end up with an actual stadium asset, but obviously, we'll hope to have
Given
something.
how lousy the Mets are,
Talk with it.
let's say Wilpon walked away. Yeah, he walks away, he's the owner. I'm not gonna,
The franchise is worth a lot of money. even if it's
well,
losing.
I don't know. I guess that's the thing. You're not liable on that debt?
No, we are not, and that's on any of the IDA debt, that's it, you're not just the stadiums.
That's the nature of the game.
It's basically lending the name for
That's
the
beautiful.
tax benefits.
It is, it's well done. Go ahead, Sid.
I'm curious, and this is really a question both for the EDC folks and for the auditors. Are you aware, have you followed the GASB pronouncements on tax abatement reporting?
I just sent you an email the other day, Michelle, on that.
Oh,
Yeah,
you did?
yes, I did.
Sorry.
I said that. But we're also aware that comments are due this Friday.
Yes.
But we believe that while we would have some supplementary information to provide what we're already giving, talking specifically about the schedule of all the outstanding debt issuance, but also the tax benefits associated with those transactions, we're pretty much comfortable that we're in the forefront of financial reporting on
So
this
you
matter.
believe you have that material already
Well,
in a way that you could use it for
Michelle,
reporting?
if I could, there's a local law, actually, Local Law 62, which requires EDC to report to city council and elected officials exactly what it is, that more so even than what GASB's tax abatement pronouncement is recommending. So the report is already in
Oh,
existence.
that's great.
Right, but, and the thrust, I guess, of the GASB is to sort of include this in the financials.
Yes.
Now, Kim and I were just speaking about this, it's a little one-sided, it's sort of just talking about the benefits that are given,
Yes.
not necessarily about what the governments get in return.
Right, because there's no gain contingencies in accounting.
Right.
Although that's something that could be discussed in a transmittal letter or something like that.
On the MD&A.
Correct.
So I know a lot of the comments that have been received so far on that, the exposure draft for tax abatement, that has been the discussion, is the financial statements the right place, the notes the right place for the disclosures on tax abatements, or can it be somewhere else in an MD&A, so you can provide both sides of the picture?
But as a practical matter, you already gather the information necessary. That's really good news, because I had been very concerned about the level of detail that had been proposed. So,
Mhm.
thank you,
Sure.
both of you.
What's next, Bernie?
I was just gonna ask him on page 10 again. All right, the bonds payable current under the liabilities, that's the stadium interest, the 24.9.
That's correct.
The interest payable on bonds other than that, that's other debt that IDA, or, I mean,
No, the bonds
No,
payable
that's
current
relates-
is the principal, the current portion of the principal payments.
yeah, that's the 24 million.
Yes.
Yes.
What is the 110 million, the 109.9, 110?
The accrued interest,
Pardon me?
the accrued interest,
The accrued interest on those?
on the IDA, on the stadium.
All right, thank you for the,
Big number.
okay, all right. How does that fit with that other schedule?
Well, I tell you, Bernie, if you eyeball it, go down, the bonds payable are $1.7 billion, and the interest payable on, I presume that's those bonds, is something like 10%. Now, that's over a period of time it's accrued, right?
Yeah.
Yes.
So, let me go to note 5. It's a question.
It's, well, note 5 gives you page 27. That's the one.
So what it,
The 1751, that would be the,
7%,
Like some of the 5% range.
how does that relate to some of those numbers on page 27? I guess late at night, it was hard for me to figure it out, too.
no, it's got the interest rate there, that's it.
All right.
Okay.
They have a lot of derivatives, too. They do. They have to have it, I guess. All right.
Whatever the market will buy is what you say.
Yeah, no, they have no choice.
So
But it's fair to say that what you're carrying on the balance sheet is bonds payable, interest payable, whether it's accrued or not, it's only stadia debt, no other debt.
That's correct.
Okay.
All right? What's next, Bernie?
No, okay, what is, I had page 4 and 5, I don't remember what.
Trouble is, they all look the same, so you can't figure out.
Yeah, no, they're nicely
You can't figure
balanced.
out which one. Which one are we doing next so I can look for it? Build New York or which one?
No, where, I was just looking, what is the, the schedule of investments? Again, you're pulling that stuff. Okay, I'm sorry. I guess we should go to Build New York then.
Oh, good.
You manage that too, right? They have no employees.
No staff, it's managed by EDC staff only.
Go
Do you
right
want me to
ahead, so
present-
shoot.
Okay, fiscal year 14 was a successful year for Build NYC. Corporation continued its path of success and increased revenues, and at the same time kept its expenses at bay. The corporation completed its fiscal year with surplus, a profit of $3 million. In total, we had 22 transactions closed. That's increasing from year to year. Just brief comments on the statement of a net position on page 6. Current assets is $5.8 million. The corporation's current asset consists of cash equivalents, and investments. At June 30, the corporation had $1.5 million on cash and $4.3 million on investments. On the other side, on liabilities, wasn't much to report, $79,000 only. The corporation's liability were limited to operating expenses, mainly consisting of the audit fees for Ernst & Young, and some other deferred revenue for compliance fees totaled some $29,000. On the statement of revenues, expenses, and net position on page 8, so operating revenues total to $3,300. I'm sorry, let me look quickly to make sure the numbers roll up.
You may want to look at the statement. The auditor's helping
Yeah.
you. Go ahead.
It's $3.3 million. The operating expenses total to $214,000. This is a reduction of $60,000 from the prior year. The decrease is mainly consisting of lower public hearing expenses and audit consulting fees. Non-operating expenses totaled to $3 million, a reduction of $1 million from prior year, and this is a decrease mainly relating to the Hurricane Emergency Loan Program called HELP that was promoted after Superstorm Sandy. Overall, the changes in net assets was $3 million, and this is a profit, an operating profit, and the overall net position increased from $2.7 million to $5.7 million. A few words for the schedule of investments. During fiscal year 14, the corporation adopted the investment guidelines and started investment activities similar to IDA. On June 30, Build NYC's total unrestricted investment totaled about $5 million. The corporation manages all investments, and these investment decisions are made according to the investment guidelines. On page 5, you see a chart, and the portfolio, the investment mix is consisting of federal secured assets, commercial papers, money market and mutual funds, as well as CDs. The federal portion of all investments totaled $2 million. The remainder attributable towards CDs, money market, and commercial papers. The investment income totaled to $2,900 and has an average yield of 0.1%. Unrealized losses of $444,000 reduced the investment income to $54,000, which is the amount what we show in the financial statements. And if you have any questions, I'm happy to answer those too.
Yeah, on page 9, where you talk about the background, the organization, you do, in the third paragraph, it's really just a sentence. Well, before we get to that, what kind of building is this? Commercial? Any housing involved here?
This is not-for-profit organizations.
So, I'm sorry?
These are primarily not-for-profit organizations.
So they may be building housing.
We have not, I'm not sure if that may be the case going forward, but this is strictly for not-for-profit
There's a
organizations.
lot of conduit obligations outstanding in a short period of time. There's $1.1 billion.
Yes.
I mean, it was, the year before was $630 million. You issued about another $500 million in 1 year. And these are nonprofits who are,
Usually, school and cultural. Schools, educational, usually cultural institutions.
Schools are cultural entities, so you could have Lincoln Center here, you could have,
Columbia University and its
absolutely, yes,
campus.
absolutely.
It's not housing then?
No.
No.
No, it's not housing.
Not at present.
And what services some of this conduit debt? Again, pilots
Mainly pilot,
or fees, depending on who, what, where?
yes,
And they have no employees, again, you manage this.
correct, that's EDC staff only.
All the debt you issue, I think my grandchildren's grandchildren will be.
2 or 3 more generations.
All right, all right.
If you don't mind going over to page 12 and deal with the cash investments again.
Big issue.
Yeah, the last line says, all investments either insured or registered and held by the corporation in its name. Money market funds are not insured,
No,
so they are held by the corporation or its agent in the corporation's name, so you have them at a depository institution,
That's correct.
and it's in your name.
It's in our name, correct.
Then you refer to the prior sentence to time deposits. No reference in the table to time deposits. The sentence says CDs and time deposits, and there's nothing above that that talks about time deposits as distinguished from CDs.
yeah, that may be
probably
a
just
typo.
straight.
Yeah, we'll correct that for next year.
You have time deposits?
No.
No, we don't.
Yeah, I
We'll
thought-
correct those.
Yeah, that's antiquated stuff.
If I might ask a question.
Go ahead, Nicole.
On page 4, in the net position section, you state what the increased assets are as a result of fees from bond transactions during the year.
So what page are you?
Page 4.
Page 4?
Yeah.
I think it would be helpful to also detail what the amount was associated with those bond transactions for the year, so there's some kind of relationship between the fees generated and the amounts actually bonded for in the fiscal year.
Can include that. Yeah, we can include that for next year then.
Thank you.
Okay, you sure you're done?
I was just gonna ask you one quick question.
the
if I may.
chairman, man.
No, it's, do you have an audit committee?
Yes, we do.
You do.
Yes, we do.
And you're managed by, since you're not a city agency, you have a board overseeing your operations?
That's correct.
How many members are on that board?
So I believe EDC, I want to say is 27 members.
7 members.
20,
27 members of the board?
yeah,
Yes.
roughly, yeah.
Yes, and
Practical.
and a smaller
Involved
amount
in
for
so much
IDA.
stuff, God. So, and the mayor appoints the majority of the board?
That is correct.
Uh-huh.
Right,
Boy, if you were a public company, ISS would vote you out of office. Turn please to page 14, and you're looking at cash, you got money in banks, there must be a reason to be in the Bank of China and the Bank of Baroda.
These
pay
are
a
all
lot
New
of
York
interest.
institutions. They're listed here in New York. They're located here in New York. So even the name says China, it is not necessarily China.
Well, where's Baroda? Wait, they're unusual names to see on a list here. Is this a policy decision, you're gonna put money in New York banks?
We diversify this, yeah, we diversify as good as we can, and we spread the money within the state of New York to those institutions.
And they're all rated?
They are all rated.
No, he only has
Most
the,
CDs really,
That's
are
the
not
insurance.
ready, but they are, again, I think within this, we're looking at, in this day and age, what could be the highest yield, what is the highest yield? And you have these New York institutions.
No, I understand the highest yield, it's a question of yield comes with risk.
Yeah.
I just, okay.
But again,
Out
it's
of
better,
curiosity, are they on the New York City Banking Commission list?
I don't believe these particular entities are, but they are incorporated here.
Yeah, no, the Banking Commission is only the banks the city can put money in, so I was just curious.
Right.
These are on the Banking Commission list.
I'm not sure. I have to take another look. I doubt that the Bank of Baroda.
It's just an unusual bunch of names.
Right, right. But again, they are FDIC insured.
So
And
there
that's
is,
why you see just the tranches of
240,000.
240 each, exactly.
I figured that out, but it's none of, now, the other one I'm amused by is that you went, there was a change between the fixed fees of $1 year on year. You got it cheaper by $1 in 14 than you paid in 13.
yeah, the $80,000 was a standard fee for 2013-14. That $1 is a carryover from the past, from the initial
Just an
year.
anomalous result,
It-
you want to round it
Yeah,
off.
we just a position that we didn't want to work for free, so
Okay.
we had $1.
It just caught my eye, that's all. I gotta find out. I've never heard of the Bank of Baroda, all the others I know.
there was no management letter on the,
Okay, what's next?
I think that, am I right? I think that does our agenda. Thank you again again, I apologize, thank you for your cooperation, and we appreciate your
You
coming.
want these? I'll bring them over.
I move to adjourn.
I second the motion. Is that
I just
really
wanted
finishes
to,
the meeting
you'll
now?
send Mr. Nelson my regards, tell him I sent them.
We're not in
I
another
think they're a
session?
beautiful set of statements, I really do.
Thank you.
You're the closest thing to a private business.
Betty, you should carry the 9.
You're the closest thing to a private business.
Between the city and the private.
Here. Representing Controller Stringer, Michelle Levine. Here. Representing Mayor de Blasio, John Graffwall.
Here.
Representing Public Advocate Letitia James, Larry Schimmel. Here. We have a quorum.
All right, because the meeting last week was only a week ago, it was difficult for them to prepare the minutes, for them to be any good, so we will have them for our next meeting, which, by the way, is not until March. We will have 2 meetings in March, we have none in February. By the end of March, I guess we'll be caught up. At this time, I'd like a motion from the members to move into executive session to discuss non-public financial matters.
I'll make the motion.
All in favor?
Aye.
Any objections? If there are no further comments, may I? Okay, then we can go right in.
We're gonna ask all the non-